What is up, guys? Hope you are doing well. Um, let's start with the open. So I'm gonna kind of expand NASDAQ a little here. So I have this new little thing here. I'm not sure if I'm fully set on the colors yet, but we'll have to make do with what we got. But what I'm trying to indicate right here is I'm trying to show premium and a discount. I didn't want to use red and green just because I didn't want it to like denote. I don't know. Maybe I'll figure out how to do red and green. Anyways, this right here is what I believe is our dealing range. Actually, let me start on the weekly. Sorry, I'm a little all over the place. Okay, so we did the weekly outlook video, and I kind of talked about how we were going to have a down week, possibly. Down week, possibly. I think we really have to keep an open mind, but the way our overnight session printed, this is what I'm looking at. In terms of NASDAQ, I'm noticing how if you go to the daily, let me zoom in really close. On the NASDAQ daily, overnight, we came down and took the low of this day. So that's taking liquidity. I also highlighted this down close candle, the top of it as an order block. So I have this order block and sell side. Remember, we are targeting upside, and we're just kind of waiting to see, are we going to have a pullback or not? I think the open, what I'll be looking for is, since we swept this liquidity, do we want to go higher? I would probably wait until we get above the new week opening gap. But remember, our draw is up here in these highs. So while we are wondering if we're going to have a pullback, we have to be prepared for if we don't, we have to read the price. So what we're doing is I'm highlighting PD arrays to see, are we respecting them, and are they showing support to the downside? Support to the downside. If we go to the 4-hour, notice we have these 3 down close candles, the top of that order block. We have a 4-hour fair value gap right here. It's really small. I didn't highlight it. We have just a lot of things converging around this swing low right here. We have these wicks. I'm sure if you measure out the longest one, you can see the consequent encroachment of the wick. But in terms of this range right here, this is what I've measured out for our dealing range right now. So why is this our dealing range? This is our dealing range because this low, this swing low right here, took liquidity, and then this is the high. So this is our low, this is the bottom of our range because we're, mapping out an upside range. Came down, took liquidity, and this is our high right now. So this swing low, if we do want to go upside and run these highs, this swing low, this isn't a discount. It happened in a discount. It tapped into discount PD arrays. Now remember, everything is relative to time frames. So if we go on the weekly, that low that we highlighted isn't a thing. So on the weekly, we are in very much of a premium. Just we're gonna have to remember that in terms of time frame, different narratives for different time frames, and because we are in this weekly premium is why I talked about in the weekly forecast, there's a good chance we could have a pullback, but we're going to wait and see if we violate lower time frame PD arrays that should support price before we, if it starts violating these levels that I'm talking about now, then we'll kind of shift the mindset. Okay, let's look for downside. If for the last week and the week before, if you've been following, I really wasn't interested in downside at all. I kept saying I'm not going to take any downside trades. I'm only going to take upside trades. But this week that's changed because, again, what I just talked about with the weekly being in such a premium, us reaching over and getting above this high and tapping into this candle, this swing high. So we have to kind of be flexible and open to the idea of a retracement for the weekly. Again, if we go down to the 4 hour, we have 3 consecutive down close candles. Lines up nicely with that daily level. And this level was in a premium. In a discount, so it makes sense to go for a premium. Now, say we flip the script and say price is going to deliver to downside. Well, if that's the case, then this would be the start of that right here, because this is the high. Not only is the highest high, but it's the highest high that took liquidity. And then we would draw this over to this low. And, well, say it's an implied dealing range. So you have that. That could be the implied dealing range. Implied dealing range is, if this is the low we're targeting for sell side, it will eventually deliver to this low. So implied dealing range, say we're targeting these lows. This pullback that we just had was in a discount for it in relation to us targeting the sell side liquidity. Again, that's actually the same dealing range that we just spoke of. So it could be, we're kind of framing both sides right now. Again, I'd want to wait until we get above this new week opening gap before taking any longs. You can see how on this 4 hour, we just stopped at it, and then now we're printing down. These candles, the bodies did close below these bodies, but we didn't get below this swing low. So again, we can kind of build out a narrative for both sides right now. If we go down to the 1 hour, I'd probably want to see this fair value gap support price. Again, I think if we come down and take this low right here, then yeah, we're going to take this low and then possibly start digging deeper. I know there's a lot of colors on here, I apologize, but we'll be digging deeper into this. So this yellow box is a daily fair value gap and this orange box is the weekly. And that would kind of, be enough for our weekly retracement. But as you can see, new week opening gap, held off price. So let's go to ES. Very similar thing on ES. If you go to the weekly, again, remember the weekly, we could see a pullback on the weekly. Go to the daily. Similar to that order block that I highlighted on NASDAQ, we also have, I highlighted this as an order block. I highlighted it a little differently, specifically because I wanted to emphasize how this low was put in right at mean threshold of that order block. But similar story, you can see us, we got above this swing high, so we just took out a major level of buy side. So we could see a retracement into the daily and weekly fair value gap below here. But I'm going to want to see these lower time frame PD arrays. I want to see it break through, and I don't want to see them act as support. So we're going to have to get through those lower time frames before we start considering more downside. What are those lower time frames? On the 4 hour, we have this fair value gap. You You can see how this low is put in very nicely. We have this down close candle also acting as an order block. I'm keeping the higher time frame daily here. If we go down to the 1 hour, same, lines up nicely with the 4 hour fair value gap. And again, remember, so we have a very similar range right here for ES in terms of discount to premium. Now, I think we would really have to get below, like this, like the consequent encroachment of this wick before I'm like, okay, we are definitely going down to these lower levels. Because again, remember, if this is our dealing range, we could be just tapping into a deeper discount to send it higher for this buy side. I think going into the morning, if we start to see, like some respect, if this low is kept intact, then I'd be comfortable playing upside. This low is taken out, depending on how, what the move looks like. Maybe I'll play a downside move to these lows down here. But again, I think it can retrace lower here and still be considered bullish. It's just kind of getting a deeper retracement. Pretty similar story in the 15-minute. Again, I'll really be watching this 1 minute this 1 hour fair value gap. You have this order block. See how this hourly candle closes. Does it respect the mean threshold or not? Looks like it's not going to. Let's go check out the dollar. On the dollar, tapping into this down close candle. So we'll see. We'll see if the dollar wants to get above, wants to respect this low. We have some sell side here. Again, kind of like I said in the weekly forecast video, I think this is a week that will be good to kind of let Monday print to see, have it tip its hand. Looking at the economic calendar, we don't have any news today. And then we have some 10 o'clock high impact news. We have the prelim GDP tomorrow in OPEC. So I feel like the GDP is usually, I feel like that's been kind of volatile lately. Be really interested to see how we open. See on the 15-minute, these highs are pretty relatively equal. Have the dollar going up. If at the open we kind of moved up pretty aggressively, I would watch to see, do we violate this fair value gap? And if it got above this fair value gap, I would be considering, see these two lows right here on the 5 minute. What we did was we really just came down to take that liquidity and then go higher. I like the idea of keeping this low intact just because this was a retracement below this swing low. So I'm treating this kind of as an intermediate term low. I don't want to see that broken to the downside. God, that's a lot of colors. So just to reiterate again, if we were to open and violate this fair value gap to the upside, I would I think the draw liquidity is to the upside, and what really happened was we swept these two lows for liquidity. I like the idea of keeping this low intact as an intermediate term low, so we shouldn't see it be broken. If we do come down and break this low, I think further downside will be in play. Again, we have this I'd probably wait until we got above the new week opening gap to take a trade though. I think we have, on the 15-minute, we have a lot of buy side that we could go for, so it wouldn't be too late. But at the same time, I feel like you could call it both ways right now. I feel like it could want to be going down. And if we can call it both ways, then we probably need to wait for a little more information. On the 5-minute, this was an SMT divergence. NASDAQ made a higher high. ES didn't make that higher high. So let's see if we respect this. I feel like we should be respecting this to the downside if it actually wants to go down. And if we get, I think the last line of defense for bears is these two up close candles, these order blocks. Let's see, we might respect it. Yeah, you can see this down close candle on the hourly. Looks like we are respecting the mean threshold of it as an order block. Yeah, and while we didn't close above this for value gap yet, you can see us come down, tap into this inefficiency, and expand pretty nicely up through this. So yeah, I like the idea. That this was just a dip down for sell side. Again, I'm gonna want to see us get above this new week opening gap before we go long. Probably watch the opening range. Again, remember, this fair value gap right here is part of this 5-minute inefficiency. And you do have this little inefficiency right here. So, again, that's why I'm kind of saying that this swing high right here, I think, is the last line of defense. I think getting above this swing high, I'll be pretty confident in saying we're not going down. Because there's no, why this swing high? There's not much for inefficiency above it. Even on the 5-minute, there's not much. Yeah, so I'd want to see us get above this swing high and then above new week opening gap. We might not do it. I think the opening range will tell us a lot. In terms of the hourly, I think we're looking pretty bullish though. And the 4 hour. And it's because, like, see how overnight, or into not overnight, into Thursday and Friday, like, there's just this, I feel like there's a lot of liquidity sitting above these highs. We did take some of it with this high right here, but there's still just a lot of, it's not like a sharp up and down, like, kind of like this is. Yeah, so you can see we made this down close candle. Where did it stop? It stopped right at the consequent encroachment of this wick. We aggressively repriced above it. Okay, here's the open. Getting above that high. I want to see us get above, close above the new week opening gap. Okay. Moving fast. Those equal highs on ES, sweeping above here. Oh wow. Great move. Looks like it's not going to let us enter. That's okay. This is just, I'm fine with just chalking today up to some good price reading. So again, we highlighted this buy side. We highlighted this sell side. On the hourly, we talked about this range and how this yellow area is the discount of this dealing range. I said all this in, early on in the beginning of the video. I don't think anyone was listening at the time, but you can see on the hourly, we made this down close candle. We came in, we couldn't close below or anywhere in it. I think on the 5 minute, I said this was a very significant low. It seems like an intermediate term low. The fact that it swept liquidity below this swing low and this swing low, and I see how it came down aggressively and then repriced aggressively higher. It was sweeping the liquidity below these swing lows. So I liked it as an intermediate term low. We came down, tapped into the last candle of it, and then I considered, that sweeping liquidity below these lows to go higher, the buy side higher. I think I'm going to wait on any entry just because, see on the 5 minute how much of a wick we're forming right now. I want to make sure that we aren't, that what this aggressive move up, that it wasn't just sweeping these equal highs to go lower. Because remember, we did kind of narrate it was pretty 50-50. And when you see like it usually happens on the 5 minute pretty often. Sometimes on the 1 minute on like major news drivers, but the 1 minute usually looks like this. But when you see the wick so aggressively above these equal highs and then the body closes so low, that's how you know it was really just a run for liquidity. So while we did outline, the sell side to buy side, I kind of told you about it. It happened a lot faster. It didn't really give us a trade entry, but now that we took the buy side, I really do think we're going for sell side, especially because when you see us move up like this, that's just kind of like it's a pretty good signature of the algorithm was doing that to induce liquidity. Wait and see how some of these candle bodies close. I'm wondering, we don't have much news driver. I wonder, I only have the economic calendar set to US events, so I'm wondering if there was maybe something pretty significant happening outside of the US. Either way, that shouldn't matter. We're just going to read the price. Notice how we aren't closing a candle body below this swing low. I'll be interested to watch that. See what ES is up to. ES is I'd like that on ES as a 2022 model. So what we did is we came up, swept this buy side, shifted structure on this 1 minute. If we getting below this low will give us a shift in structure on the 5 minute, which I will also like, and we might possibly have to move that entry down. We'll see. So okay. Gonna wait for this candle to print. I don't think it'll be going up there. If it does go up there, then I'd actually think I wouldn't want to be in it. Now you can, on the 5 minute, consider this a breaker structure. You can consider that wick a high, so high, low, higher high, break. I'm gonna wait for the 5 minute to play out a little more. Let's look at NASDAQ. NASDAQ got below those lows. What am I? Oh, almost traded on the wrong count. Okay, we are doing the paper trading for this YouTube channel. Yeah, I don't really like it how I would have wished this 5-minute candle would have closed below these lows. We do have the dollar. So with the dollar looks like it still wants to go higher. Continue to watch that. This was opening range gap. So that makes a lot of sense. You can see we opened immediately, filled in some of the opening range gap, then dropped lower. We got a 2-minute fair value gap again. Don't forget, you can time frames in between 1 and 5 do matter. So whether it's 2, 3, or 4, the algorithm does acknowledge gaps in those time frames. Again, I would have really liked a close below this low. And remember this low right here that I talked about that I thought of as significant. It kept that intact. Okay, but on the 2-minute, on the 2-minute tells a story. A 2-minute fair value gap. We'll stick to the 1 minute, but it's good to look at. Again, I'm gonna wait for the 10 o'clock hour. I want to see the opening range, what it has to give us in terms of data and narrative. can see NASDAQ coming a little aggressively above that new week opening gap. ES, its new week opening gap was less than one handle. I think it was less than one handle, so I didn't end up putting it on. It's usually my line in the sand. Okay, yeah, notice how the 5 minute didn't close a body below that low. That's kind of what made me a little suspect of it. And now that we swept this buy side, it is a little, it's not there for us to target. Next would be that. But the fact that we so clearly swept these equal highs, I just want to make sure. I'm going to let the opening range print because after the way we swept those highs and with the bodies, the way the body closed so low, I think it made me think it wants to go lower. But then the fact that the next candle didn't print and close below those lows is another thing that is making me think, well, if it really wanted to go lower, I think it would have done that. It's the opening range gap for NASDAQ. So again, if we get above this new week opening gap and we're above the opening range gap and the dollar's dropping, I'd be interested if we got above this swing high right here. I think we could see it act as a breaker. Be low, high, lower low. Let's swap liquidity. But we'll wait until that happens. Talk about it anymore. It's the 2 minute. Dollar making a pretty significant break to the downside. Oh, look at that 15-minute candle. This 15-minute candle swept liquidity on both ends, buy side and sell side. I want to see if it got. This low came in at 15,970.75. This low came in at 15,970.25. So it did actually sweep below that low. By 2 points, 2 ticks. Again, this isn't, remember, when the candle bodies tell the story and you have these large wicks on both sides, and the bodies don't move too much, it's just, wait till you're a little more confident. You can see our bodies came up right to the top of the new week opening gap nicely. That's an example of why I usually say I like to wait until we close above it. I don't like to trade through it. I'll use it as a target, but I am liking upside a little. I'm a little more now. As long as we're above this low. Dollar seems like it's wanting to continue lower. I will be wary. We know with no real high impact news happening, and then watching at the open us sweep buy side and sell side. I think I kind of talked about it. I think it was the Friday after Thanksgiving, or maybe it was the Wednesday, but it was either the day before or day after Thanksgiving, when the market it made a lot more sense for the holiday weekend. But what it does is it opens and just sweeps liquidity and then just kind of enters into like a time distortion. So again, that's why I think it'll be pretty important to make sure that we're trading outside of this high to this low, because this is the high and low that just swept liquidity on each side of the market. So this is our dealing range right now on this 1 minute, and on the on the 5 minute, well, and on the 15 too. So yeah, I need to do something about these colors. Sorry, I just made this thing before the market opened. I was kind of resistant to using green and red, but I'll probably just end up using green and red. Ooh, don't want to do that. No, that was an accident. There we go. Oh, now we have that execution there. Okay, I like how we're finding support on this fair value gap. It's in the discount. It's in the lower area from this dealing range that I just measured out, but I'm going to take it off. Okay, we have the dollar moving aggressively higher though. So that's not good for upside. Again, I won't get confident on longs until we get above the opening range and the new week opening gap. And this blue and green, or blue and yellow on the higher time frame, that's an hourly dealing range at this low. Why this low? Because this low is the low that swept these swing lows to engage sell side liquidity, and then this is the high. So if we are continuing higher on these higher time frames, this is the range. So technically we would be in this yellow area is a discount if the algorithm wants to reprice to this high. Okay, I like how we're still found support on this fair value gap right here. Okay, we're moving through the opening range. It looks like we want to get up on the other side of that new week opening gap. I'd want to see the dollar also show signs that it is agreeing with that in terms of, like, if we're expecting the indices to go higher, I'd want to see this high on the dollar show it was a sweep just above these for liquidity to go lower. So then we'd have the dollar going lower and the indices going higher. See, we came up, touched the bottom of the new week opening gap. Maybe a tick short. Pretty indecisive open, I will say. Again, I think coming into this 10 o'clock hour, I will be waiting until we get either above or below this high or this low. For the silver bullet. I am liking how this fair value gap is holding off price. I like that we have this definitive low right here, right in the middle of it. I'm noticing how the dollar came up, broke these highs, came low, and this swing low was placed really nicely at these highs, and then it continued. Okay, I'm going to put the sell side right there. Have these relative equal lows, but that did go 2 ticks below that low. I wonder what, oh yeah, ES didn't make a, so that was a little bit of an SMT right there. The fact that ES didn't makes me a little more confident about upside. But again, just look at this 15 minutes. Just swap liquidity on both ends. Okay, yeah, I want to see us close above the new week opening gap. I like that. I want to see more strong bodies, not so many wicks. Dollar, you can see the dollar right here came up. I want to see it break below this low. This yellow line in the background is the dollar. I like that. Let's see what ES is doing. ES is doing something pretty similar. Okay. Again, wanna get a body close above the new week opening gap, not a wick. Okay, we got a body close. I want to see the dollar continue to drop. And I want to see some continuous upside candles. Okay, I want to see that act as an immediate rebalance. We came down, touched the top of that candle, leaving no fair value gap. I want to see it now move quickly to the upside. If it doesn't within this candle, then I feel like that's going to be a red flag. Again, okay. I want to see it get through this consequent encroachment, not stop at it. The dollar. Okay. I do think the drawn liquidity is to the upside. It's just not delivering that cleanly right now. And if we got like 3 good candles, or in this case maybe 2, that created like a solid fair value gap, I would take it to the upside. But I'm not going to take a fair value gap unless it's showing that it really, unless it like proves to us that it has the intention to go up, and not these like wicking back and forth small body closes, small fair value gaps. Again, this, I believe this should act as a balanced price range because it delivered buy side and then immediately sell side. So I would have wanted it to see it actually get above this high pretty quickly after getting through the opening range gap and the new week opening gap. So the fact that it's doing that makes me a little concerned. As you can, if you're wondering about this fair value gap, I'm not interested in that because it is on the it's on the downside. It's below the new week opening gap. There's no rule saying that it can't go down there, tap that, and come back up, but in terms of my own trading, I don't do that. See, the dollar actually is making a new higher high. And you can see on the 5-minute, remember wicks are similar to gaps. And you should note the consequent encroachment of wicks. So I'll be watching to see how this 5-minute candle closes. Because if we break below the new week opening gap and below the opening range gap, that would mean that this 5-minute candle is printing as a down close, and it would seem as if this consequent encroachment held price off. But if we close above it, I will like that for upside. But again, I do want to make sure I'm trading with the dollar and the indices working together. So I don't want to take an upside trade if the dollar is continuing to make higher highs. Okay, I like that. I want to see another big candle. Specifically getting above this high. Okay. Awesome. Okay. Let's look, see if we can get a fair value gap entry. Remember how I said I think this could act. I don't usually like outlining 1 minute breakers. I never really found that much consistency with them, but just this structure is just very breaker-esque. It's low, high, lower, low. We will find a fair value gap to enter in on, though, not a breaker. I'll put the stop loss. Cool, we're in. So in terms of the stop, I want to keep it below the top of this in case this wants to act as a breaker. Again, measure out. See how ES is doing. Have the dollar going lower. I would have liked to see a little more sensitivity. I would have liked that to be a breakaway gap, or at least to hold off price, especially after breaking above this high. I'd want to see it reprice quickly now above this fair value gap. Again, remember we're going to use 3 PD arrays for this stop. So 1, 2, 3, 2 fair value gaps, and this down close candle as a breaker. I want to see it get through. I don't want to see it use it as resistance. Dollar, watching the dollar go for this low. I want to see this close above it. I don't want to see it act like that. Gonna keep the stop at the 3 PD arrays. Dollar is making, looks like it's making that low. Okay, I want to start to see price really move to the upside now. I was okay with this retracement just because even on the 5-minute, it's this low high, lower low structure. So we came down, touched the top of that. I don't like how this fair value gap is keeping price down, but I'm gonna keep my focus on this 5-minute structure. We have the dollar on our side. I would have wanted it to have repriced above this fair value gap by now, so I'm gonna start considering closing the trade out. Okay, yeah. Don't like that. If we do get some movement to the upside, then maybe we'll find a re-entry. But just the way it respected this inversion. This. I don't want to get bearish yet, but dollar is continuing. Looks like the dollar is continuing down. Yeah, hard draw, just with hard to pick the draw because of this aggressive, because of this open knocking out both sides. When we did get above that and we closed the 1-minute, and we closed the 5-minute above it, that led me to believe we were moving up. I think, again, remember 3 PD arrays. So you can see candle bodies respected. I mean, threshold. It is looking bearish though, so I'm gonna wait. But the dollar, let's see. Dollar's continuing to go lower. If we get above this, I would use it as an inversion if it came back down. Dollar's continuing lower. But again, I'd want to wait. I'm going to take a quick look at ES. ES tells a different story. You can see we're kind of below the opening range gap. We had this kind of like a shift in structure here in the 1 minute. Ooh, I do like downside after looking at ES. Yeah. You can see ES also didn't close the body above that wick. Yeah, I think this is going to go down to here. Tough read on NASDAQ. I feel like, it's not often where I get the draw wrong. So I think this was our silver bullet to the downside. I think NASDAQ looked a lot more... NASDAQ just looked so much more bullish. But now it's turning over. And, it's because we were above these two opening range and the new week opening gap on NASDAQ that made me trade it to the upside. But if you see on ES, we were below our opening range. I think it'll go down here. Okay, well, can't get them every day. I would enter if we got like a pullback. Let's see. We might not get it. I'd put the stop. Come on, get us in. There we go. So the stop is above. We have it above this candle, which makes the fair value gap. We have it above mean consequent encroachment of this fair value gap. We have it just right there. Let's see. Damn, you know, I'm wondering if we come up and get hit, I feel like we'll probably, yeah, you know, I think the market right now, not just because I'm taking losses, but after we're sweeping liquidity just left and right. I feel like it's in a little bit of a seek and destroy model. And it's kind of, this is the struggle you might have when, see, you just don't have any like untouched on left liquidity, because at the opening we just ran on the 15 on all these 3 time frames. We ran buy side and sell side in the first 5 minutes. So we don't have any, you know, obvious liquidity pools sitting anywhere. And then what it does is it just kind of, I remember how I told you where I would want to wait for it to get above either this high or this low. Usually that's like a safe bet, you know, probability wise, but you're still going to take losses. And, you know, there are days where the market just won't execute the best. So yeah, we closed above this high for NASDAQ, but on ES, we were still in this range right here. So 2 losses in the morning. I think it's pretty clear that I just don't have my finger on the pulse that well right now. I think, you know, a big part of it was just this, again, us sweeping liquidity on both sides. I'd be curious to see how the rest of this 10 o'clock hour pans out. You know, does ES stay in this range? NASDAQ did break above it, but I think as long as ES is in between this high and this low, we're just gonna be gyrating back and forth. As terms of the P&L, let's take a look. Okay, so that first trade on NASDAQ, we had a pretty wide stop and it moved against us pretty well. No worries, we'll just keep chugging along. I will not be on in the afternoon. I will be on tomorrow. Enjoy the rest of your day and good luck trading.